Good evening, everybody. Good evening. We are getting ready for our stream now. So, guys, I'm just going to wait for everybody to get on and then we're going to jump away with the strategy. Okay. Good evening, everybody. So guys, for tonight, it's gonna probably be about an hour and a half, where I'm just gonna run through the strategy. So I've done the entire back testing. I've done the layout. Hi, Elaine. How are you? So, guys, I'm just gonna run through everything. I'm just gonna wait for everybody to join up, and then we can take it from there. I'm also gonna be streaming uh, on live on YouTube. So I'm also going to be streaming on. Oh, what the hell did I type there? We're also going to be streaming on TikTok, but on TikTok, it's not going to then you won't be able to see the actual what I'm busy with. So I'll just direct the guys to that. So let's do a live stream there as well. Okay. Settings. What is it? Go big leg.
Big wants to come in your room.
Okay. Okay, but you can't come in front of the cameras. What Bumblebee book?
Remember your bee coloring book you got?
Where's that book?
I don't know. Vicky!
Where's the bee? Oh, yeah.
Because me and Vicky also want to color together.
There you go.
Go.
All right. Oh, look, I like that because she's sleeping here. Oh, let's see. All right, guys. So tonight, welcome to everybody. So, guys, the guys that are on TikTok, it's just for an information type of thing, guys, where I'm going to be explaining the strategy. So, for the guys that want to see how the strategy works and stuff, you're gonna have to pop onto YouTube. So if you want to get onto the YouTube is, check the link in the bio. The YouTube channel is there. Then you guys can come and join on the YouTube channel. That's where I'm actually going to be sharing the screen and showing you guys the breakdown of the strategy itself. Hey Raymond, how are you? So guys, how it's basically going to work tonight is, what we're going to do is I'm going to show you the actual strategy. Then I'm going to show you trading history. So I'm going to show you the trades that I've taken, how the setups work, how everything works. And then after that, I'm going to show you guys. So we're not finished with all of the indicators yet. So there's going to come 2 separate indicators, guys, that's going to come with the strategy. It's obviously going to be the UT bot. So the UT bot, we have made a couple of changes to the UT bot, which we will make available. So we will the UT bot indicator, as well as with a linear regression candle. Those are 2 indicators that were never ours. That I don't have the intellectual property for them. But what we are going to do is we have taken them, made some modifications to them. There's a couple of things that we've changed, but we are not going to be selling that indicator. So that nothing around the strategy is going to be sold. This is going to be an absolutely free strategy for you. Because of the stuff that we've used to put it together, so you can basically just use the resources. Otherwise, what you can do is we have taken some of the indicators like the UT bot and the linear regression. We have done some modifications to those, and then the only thing that I'm still waiting for, guys, is the Fibonacci, the Fibb update. So what we're going to do with the Fibb, I'll show you guys now on the screen. We have some settings towards the Fibb. So you're still going to be using the standard Fibb. We're not changing the deviation. So you're still going to be using the 0.5, the 618, and the 7. You're still going to be using those levels. But the one thing that we're going to add to the Fibb is we have added to the Fibb 3 levels for stop losses and 3 levels for TP. So what does that mean, guys? It just means that when you pull your Fibb on to get into a trade, you've got 3 levels of stop losses that you can use, and you've got 3 levels of take profits that you can take. So when you pull up the Fibb, it's already going to have the settings there, and you can then just simply take it from there, and you can work with it. So I'm going to now jump onto my screen, where I'm going to be showing you guys the actual rules. So I'm going to break down step number one. We're going to break down the rules, and then we're going to run through the strategy itself. How does the strategy work? How do you apply it? And then we're going to run through the PDF as well that comes with it, where you can take the PDF and it's got all of the rules on there. So this strategy will now be traded every single day live on TikTok for you guys from when I trade from 2 to 4 every single time. So the strategy now has its rules set down. It's got back testing. I'll show you the back testing right now. So just to give you guys some framework around the back testing, guys, if you want to see the actual strategy, sorry guys, let me just talk to the guys on TikTok. If you guys want to see the actual strategy, you have to pop onto YouTube. I cannot share it here with you guys on TikTok, so you guys are going to have to go to YouTube. If you don't want to go to YouTube, then you're going to have to wait, because we're going to do the live stream. Once I'm done with the live stream, the video will then get its thumbnail and it will get popped onto the channel for you guys to use with all of the information there. All right, so now let's jump away, as it's now, we've given it about 3 minutes. We're going to give it a bit more, and then you guys can see the actual strategy in action. So that's what's going to come with the strategy. You're going to see how the analysis work. You're going to see how you're going to look for a potential trade opportunity, and then you're also going to see the actual live results. Now, the results that I'm going to show tonight is not results that of a back test. So this is not like I sat there and I created an indicator or something and I back tested. This is my actual live results. I will show my MetaTrader account, how much growth I made on my MetaTrader account since trading it from the beginning of the year. I'm going to show you guys the setups. What is an A+ setup? What is a B setup? What do you need to look for? Then I'm going to give you access to the indicators, and then I'm going to take you through the process step by step of how to actually trade this thing. Guys, the reason why I'm doing it on TikTok as well is so that the TikTok community can come and jump onto YouTube and come and have a look at what we're doing here, guys. All right, so this is the strategy that you guys are going to see from 2 to 4 on TikTok every single day. So this is the strategy I'm going to be running until the end of the year. Okay, so it's also a viable strategy. You can use it on a prop firm, and you can also use it in your own personal account. Yes? What? Okay, just get one page in my book, then you can. Mama, just be busy. Come on. I'm busy now. Off you go. Off you go. Off you go. All right, guys. So if you guys want the link, you can either click. If you guys want to get onto the YouTube, you got to go to the link in the bio. My YouTube channel is there. If you don't know where the YouTube is, then just scroll down. Just join one of the groups. In the groups is the actual. So the name on YouTube is called Sustainable Trading. Okay, so if you want it, guys, check the link in my TikTok. There's a link in the bio. It's a link tree. Click on it, and the YouTube is there. And then you guys can come and join us on YouTube, where we're going to be breaking down everything step by step and showing you guys the actual live results. So this is not me doing a back test. This is me actually showing you my trading history. So I'm going to show you guys exactly my trading history on my MetaTrader 5, my diary that is connected directly to my MetaTrader 5. So my diary feeds in directly from my MetaTrader 5, so you guys can see the actual amount of money that I've made off it. But it's not about the money, guys. It's more about the percentage that I've made so far with the strategy. It's really working very well on gold at the moment, and I do think it is it's a strong enough strategy to carry us through these difficult times at the moment with gold, because gold has been very erratic, and I think it's very robust, and I think I have enough data behind it to truly trade it for the rest of the year. I'm happy to trade it, and I'm going to be published. I actually started with a strategy last year already. If you guys were watching me on TikTok, you'd see that I started with a Fibb block strategy, and I've been trying to perfect the thing, and I do believe I've perfected it. So let's quickly jump onto all the information for you guys, and then you guys can look at the information, and then you can make a decision from there if this is something you would like to do. What is the cost involved? Absolutely nothing, guys. There is no cost involved at all with this strategy. Okay, so we're not selling the indicators. They are not our indicators. We simply took some of the free stuff that we got, put it together, and we created a really good strategy. And that is why I'm not going to be selling any of this. If you guys do want to give back to sustainable trading and you want to be part of it, then the only thing that we always ask is please join one of our recommended brokers through our links. Or, if you're going to be buying a prop firm account and we are trading with that prop firm, please support us by buying another. It's not going to take anything away from you. If you join one of our brokers, it's not, the broker doesn't pay us when you deposit money. The broker only pays us when you trade. And using our strategy, I think it is a win-win for both of us. Because as you guys are trading and growing your money in the same places that we are growing it, we get a bit of a kickback. And that's obviously because you guys are going to see the indicators. All of those, the indicators, everything that I do, I pay for it out of my own pocket. The company pays for it. So that's why if you feel like you want to give back, then we would appreciate that support, guys. But other than that, here is the actual strategy for you guys. Okay, so I'm going to be sharing the screen now, and then I'm going to show you guys the indicators, the modified indicators, and then after the stream, you guys are going to get on the group, both on Telegram and WhatsApp, you guys are going to get the PDF where you guys can go, or the link to the PDFs where you can go and click on it. And in the PDF, there will be a whole list of how you trade the strategy with all the indicators and how to set up everything and that. All right, so let's jump away. If you guys got any questions, pop them in there. Thank you so much, guys. It's Jazzy. She's our trusted warrior here. She's been with us for quite a while. She's attached to her mom. So every time I come and sit and do anything, she'll always be with me. So guys, let me share my screen, and then you guys can have a look at. Okay, so I'm going to share my screen. All right, so I'm going to quickly pop over to here. Not this chart, not specifically this chart. I want to switch over to this one. All right, so just want to make sure you guys can all see the screen now. So, okay, guys, here is the performance. So I'm also going to be opening up my diary because I have access to Women in Forex now. So just to give you guys some context, I work with Women in Forex Africa, and part of my membership with Women in Forex Africa is we have a diary. So it's like a diary that you plug into your MetaTrader 5, and then you decide, what trading history you want to show. So it will update you. So it pulls all the data from your MetaTrader 5, and then it will automatically populate a dashboard for you. So instead of us now sitting here scrolling through every single trade, I think the dashboard is really going to help you to understand where we are. So at the moment, let me show you guys, here is my trading journal. Okay, so there you can see, you can sync it to MetaTrader. There it's my connection. There you can see it's connected to my MetaTrader here. You can see it. And then here is the dashboard. So as of right now, where we stand, I have a win rate of 70.2%, which is pretty cool. And that's over 47 trades. Okay, so you guys are going to see that there's 47 trades that I've actually taken, and those trades are within the trading history that we have. Okay, and you can see the profit factor is 1.65. It's only, you can see this is I've only got March, April, and May on this diary at the moment. So it's only these 3 months that I'm going to be showing you guys here. But the trading history goes all the way back to January. And the reason why there's a switch over is because I switched over the money from FPS to Headway after the end of February. I then moved a lot of my portion of money to Headway, and I'm trading mostly with Headway. I have a very small account with FPS, and unfortunately with my diary, I cannot link multiple MetaTraders to it. So I can't put multiple. I can just put my latest MetaTrader, which is Headway. All right. So here you guys can see we've an average of 33 winners and 14 losers, and I will correlate my diary with the actual trades that have been taken. The analytics at the moment, you can see here that, the win rate is looking pretty good. I'm very happy with the win rate. Okay, obviously my winners and losers, guys, are going to be based upon, the size of my account. But here, this is important. This is our win rate. Our profit factor at the moment, we are sitting at 3.88, which I think is very good. So that's why I'm also very suspicious of this, because I've never had such a high win rate with a strategy. So I don't want to just we are in we finished the first quarter of the year. So I don't want to just be say let's, So you can see here my diary has been feeding in from March, the 2nd of March. And you can see all the way down here to to the 7th of May here. So you guys can see from May, and this has been my diary so far. Okay, so you can see every single one here. You can see my position. You can see exactly, so it pulls it directly from my MetaTrader into Women in Forex. Okay, so that is the results I have achieved. Am I saying that these results are going to stand this way for the rest of the year? I don't know. I have my first quarter in, and my first quarter is looking pretty good. Okay, April was a bit of a really bad month on the strategy, and I'll show you guys now. It wasn't as profitable as it was, but it was also across all of my strategies. April was a shit month overall. So I think it was just, the strategy, the win rate fell all the way from about 72% all the way down to about 68 or 67, and then with the beginning of May, we were it brought the equity curve back. You can see here from the equity curve how it brought it back. All right, so this is now the actual diary, so you guys can see here is the win rate in that. Now we're going to quickly go over the rules. So here is the overall performance summary. So this is the PDF you guys are going to be getting. So it's got over 62 trades within the strategy. There is 40 winners and 21 losers. There's one break even. The win rate, as you can see, the average win rate since January to now. So for women in Forex, this is from March to now. The actual win rate since January is 65.57%, which I think is pretty damn good. Now, the stats here are based upon a $10,000 account. Okay, so this means that we had about a 50% growth since January all the way to now. Now, I mean, for January, February, March, April, for 4 months to achieve 50% growth, I don't think it's bad. I don't think it's bad at all. That's over a 12.5% growth on your money every month, which I don't think is too bad. And you can see the profit factor is within that same range. And your average profit per trade, you're looking at about $82. Again, guys, this is on a $10,000 account. So don't look at the money value and be like, oh, cool, that's what I can make. You got to go and put it to your account and the amount of money that you have. But it's just giving a nice benchmark for you guys if you guys all want to deploy it on like a prop firm, or you want to pass a challenge or something like that. So this is very, very important. Consistency metrics. Our largest winning streak was 6 trades in a row. Our largest losing streak was 2 trades in a row, guys, which this is absolutely phenomenal. I really, really hope that the strategy, the way I'm trading it now, that we can sustain this type of growth throughout the year. We will have a look. Because for many people, January was a very bad month in the market. Guys, for me, January was phenomenal, especially on this strategy. January was an amazing month, guys. Guys, on TikTok, I will be answering questions, guys, but I just want to get the strategy stats through for you guys. So you can see that, if you are going to be trading this on a prop firm, or you can easily work off 10 trades. So taking, if you're taking a 2-step challenge, you can easily deploy a 0.5% or 1% based upon this strategy. Okay. So what stood out for us in the strategy is, even with multiple $100 losses, your winners heavily outweigh your losers. I'm going to show you guys how heavily your winners are knocking out. The reason why, now you might be asking yourself, Marnie, how did we get to a profit factor of 3.43? Because this is unheard of. Normally a profit factor will range between 1.5, maybe 1.8, round about there. But for 3.43 is like, it's the first time in my life I've ever had a strategy that stood this strong. So because of how I'm going to show you how to structure the trade. So when you execute the trade, there's a way that we execute it that is giving us such a good upside. Okay. So you can see you have frequent strong winners. We are controlling the downside very well, and there's minimal emotional damage from drawdowns. Because we only have a maximum of 2 trade drawdown, you don't have to face that consecutive loser over time. The risk to reward. So let's quickly look at the risk to reward over the period. We kept our risk to $100. We kept our reward between $100 to $200. Okay, so when we had our break evens, we still made $100. So we still made a 1-to-1 when we had a break even, which I think was pretty good. And then obviously, we transitioned things that was later on the period. And the reason why we had the transition is because, as you guys know, I've been working at the strategy for quite a while. We had, our winners went from like smaller to a lot bigger size winners. There's also the partial scaling method, which I'm going to be showing you guys today. And then we've also got a very strong break-even management, which I'll also be showing you guys tonight. So you can see that the equity curve is very nicely in the way it's grown. Now, what is dangerous? Because I can sit here tonight and I can tell you guys all the wonderful things about the strategy and tell you guys how great it is, but I'll be doing you an injustice if I don't tell you the downside. Now, you can face a double full loss. Okay, so what does that mean? when you structure a trade, right? I'm going to show you guys how you structure a trade. If you do structure the trade, you have the opportunity that sometimes the market will aggressively retrace against you, and you can have you can have both trades that you've taken, will both of them hit stop loss. Okay, so that is on the 30th of the 3rd. You can face a double full loss. Okay, so that's something you have to take into consideration, that there is those days where the market is going to be like, screw you, and it's going to aggressively turn against you. Even though you checked the trend, even though you followed everything, the market will come back to completely annihilate you. So my suggestion to you guys here is, please make sure to execute with stop losses. This is not a strategy that you can just leave and be like, oh well, no stop loss. You've got to deploy a stop loss with a strategy, or else you're going to have a nightmare while you're trading. Okay, so what is the quality? Obviously, the win rate. This is some of the stuff that I evaluate my strategies on. Our win rate was strong. Our drawdown control was very good. Our profit factor was excellent. Our consistency was pretty good. Scalability is high. And obviously, risk management was very controlled. At a 3.43, this is an extremely solid. Okay, so if this data is forwarded now, from where we are now, forwarding it for the next quarter, it's freaking good. It's freaking good. So what's the key observations that I made is that we have a huge risk to reward on trades. I'll show you guys how this works now. And we have a very low win rate with home runs. So what it means is, when we have a really good run of trades, we consistently execute within the same range. Now, I'm going to show you guys as well, there's an optimized setting that you guys can take for the guys that wants to swing trade it. So you start off with an intraday, but you can swing the trade for another 2-3 days and increase your winnings as well. Okay, so the estimated growth, you can see here, 50.96 over 3 months. It's brilliant. It's absolutely brilliant. Okay, so these are the additional stuff that you guys can look at. This is the overall verdict. So we have like a specific thing that I put it through, and then we get a statistical structure to tell us, is this good? Is this bad? Where is any potential loopholes that we need to look for? Okay. And then obviously we are going to take these 4 points and we're going to take the strategy forward to try and see if I can make it, a lot better. So here is the important part. Here is the strategy overview. So the strategy is designed only for gold. It has not been tested on NASDAQ. Now, I am going to say this, but I want you guys to go and do your own homework on this. Once you understand the strategy, go back to NASDAQ and go and test it. Now, we know that NASDAQ, US 30, US 100 runs very similar to gold, okay? There's a lot of correlation, but there's only an 80% correlation between NASDAQ and gold, okay? So my suggestion to you would be is, if you are going to be trading the strategy on other instruments, they have to have high liquidity zones and they have to have a lot of volume during New York session. The strategy is only for New York. Yes, I did back test it in Asia. It works phenomenal in Asia as well, but I don't have the statistical data. So I didn't trade during those periods. So I can't tell you, from the back test, it looks pretty good. But from a forward actual trading it, I cannot tell you, because I only traded the New York session. So the strategy must be deployed during high volume time frames. Can you trade this thing during news? No, you either execute before news or you execute after news. Okay, so the strategy will pan out after news. So if you do, for instance, let's say you do trade news, you do take a position on that, during news, and the strategy will still give you an opportunity afterwards to kind of like get into a trade as well. So it does. We did trade the strategy during news events. Let me put it that way. So news events are included in the actual trading data. All right, guys. So that's very, very important for you to remember with this. So news data has been included. So if there was a yellow folder or a red folder and we were in an existing trade, we didn't adjust lot size. We didn't bring the stop loss up. We just left the trade to play out either way. Okay. So the strategy overview, okay, so it has a 30-minute higher time frame bias. You have to go, first of all, to the 30-minute time frame higher bias. Then you're going to drop down to a 5-minute. So we're going to get our direction on 30 minutes. We're going to find our entries on 5 minutes. On the 30 minutes, I'm going to show you guys now how to set up your charts on the 30 minutes, and then how we're going to look for a potential entry on the 5 minutes. Okay, so the objective of this strategy is to align the lower time frame with a higher time frame. Okay, so you want to have that higher time frame momentum, and then you want to trust that higher time frame momentum to say, okay, momentum is showing for a long position, a buy position, let's stick to that bias, and then we wait for the 5 minute to either confirm that or deny that for us. And then if we have that alignment between the 5 and the 30 minute, well, that is the time you will execute a trade. Okay, but it can only be done New York session. New York session is the only time you can do this. Okay, so higher time frame bias. I'm going to show you guys now how to set up. I just want to quickly run through the PDF. You can see here what is a buy bias. How do you determine a buy bias? How do you determine a sell bias? How do you set up your chart on the 5 minute? And then I'm going to show you guys how to draw the 1 p.m. range. So we're going to show you guys that. And then obviously there's the main trading. The main trading is from 2 p.m. to 6 p.m. and trade management happens from 4 p.m. to 8 p.m. Okay, so that's the range that we're going to look at. Okay, is there an indicator that can encompass all of this? Unfortunately not. You have to learn the strategy and you have to practice it. Okay, so we can't automate everything. Okay, the reason being that is because it's very subjective to what your eye is looking at the moment, and you need to make the judgment call to say, here is a specific range. Okay, so I don't think that this thing can be deployed through a robot or through some automated system, because it has a lot of manual things that you need to look at before executing it. Okay, so you need to go and practice it. And then we have our entry model. How do you get an entry model? I'm going to show you guys the Fibonacci now. So what we did with the Fibonacci is we broke the Fibonacci down for you, where we can show you this is where stop loss is. So we're giving you an idea of where to put your stop loss, and we're giving you an idea where to put your take profit. Okay, so it's up to you what you want to do. You can put your stop losses here. There's 3 levels for stop losses. There's 3 levels for take profits. You need to decide which one you want. Obviously, if you are targeting the highest range, the results you're seeing here is I'm targeting the highest range. So I target TP3, and I'm giving you the stats on TP3. Obviously, if you go to TP2 and TP1, the stats obviously increase highly in your favor. So your win rate goes up, but your income goes down. So remember, they are inversely correlated here. So if your win rate goes up, the amount of money that you make is obviously going to come down. If you want to make more money, then you've got to sacrifice on the win rate. All right, here's a breakdown of a sell setup. And then obviously in the PDF, we've also thrown in some examples for you guys on how this will work. So there is a long opportunity, how a long opportunity looks like, and what does a short opportunity look like. So now I'm going to quickly run through the chart with you guys and show you guys the actual trades and how you execute it. So step number 1, guys, would be you open up your chart. So what my suggestion to you would be is if you've got TradingView and you're going to be doing the analysis. So we are going to be moving this indicator onto MetaTrader 5. Okay, so we're starting on TradingView now, and then we're going to that's why we've taken the YouTube bot and we've taken the linear regression candles, and we are busy coding it into a MetaTrader 5 indicator for you guys. So it should be deployed later next week onto MetaTrader 5 as well. So then instead of you having to flip-flop between MetaTrader 5 and your TradingView, you can now go directly to MetaTrader and everything will be set up there for you. Okay, so then on MetaTrader, it will draw out this purple block for you. It's going to draw out your purple block. It's going to draw out your other block, and the only block that you're going to have to put in is the 1 p.m. And I'll explain to you guys now why it's very difficult to code the 1 p.m. block. All right, so this is obviously price as it was on Friday with NFP. So what happened here is we had a bullish trend. So how do we determine that? Step number 1, guys, is you need to have at least 2 charts. Okay, so when you open up, I can actually take your YouTube. So when you open up your TradingView, I need you to bring in 2 gold charts. I don't care. Just make sure that both of them, if one of them is, with I think if you click here on your actual watch list and you type in XAUUSD, so you can see mine is Awanda and FXCM. So just bring in 2 gold charts that looks very similar to each other, and then just bring them on, because one of them you wanna be looking towards your higher time frame bias, and the other one is where you're going to trade on. And the reason why you want to have two charts is because your chart is going to have this on. So as you are progressing with trades, you're going to be you're going to be putting some stuff on the chart, and you don't want to get your higher time frame bias and your trading charts on the same chart, because when you go to the higher time frame, this all is going to go completely jumbled. Because look at this. This is what it looks like on the 5-minute time frame. But the moment that you drop onto the 30-minute time frame, look at this now. So everything starts becoming a little bit skewed and stuff for you. So it's a little bit confusing. I don't want you guys to get confused with it. Look at that. Do you guys see what your chart looks like? Now you got to try and determine some sort of bias here. So rather bring in two charts, and then you have one chart here where you can do your higher time frame bias and your other charts. So what do you do with your higher time frame bias? Very simple, guys. You are going to be using two indicators. The one is you're going to be downloading it now. We've called it the Fibb block strategy. So you've got the Fibb block strategy you're going to be bringing in, and the other indicator that you're going to be bringing in is, where's that one? Here it is, the Fibb block. So it's an updated version of the linear regression candles. Where you're going to bring this in. So you're simply going to go to the 30-minute, and you are going to be bringing these two indicators onto your chart. Then you are going to go onto your candles, and you're going to change them to Heiken Ashi. Okay, because you want to smooth out the price for yourself. You want to kind of like be able to look at it and say, this is the type of trend that we have at the moment. Okay, I just want to quickly switch off this. Quickly just go into settings. So let's quickly jump through the settings. So on your linear regression candles, what you can do is you can go and switch off these specific candles here. You don't want to see them. The only thing you want to see is the plot, right? You just want the plot. You want that moving average that takes into consideration the candle and the volume. That's what the linear regression candle indicator does, is it creates a moving average for you that is based upon both the candle structure, the minimum average that the candle's moving, but it's also taking into consideration volume for each one of those. Okay, so you want to set that up as such. So here is how you will set it up. And then what you want to do then is you want to have your next one is your Fibb block strategy. And in this, you're going to change your sensitivity to 2, and you're going to make your ATR period 1. Okay, so then your chart is going to look like this. So when the YouTube bot has printed you a long signal, so when you see a buy here, a long, you will then accept, as long as these candles stay green and they have not flipped completely red, you will assume that the direction is bullish. Okay, you can only say that the direction is bearish once you have a red candle close. Okay, so when you are trading it and the candle is going between red and green and red and green during that 30 period session, you do not change your bias. If it started out green, then you stick to the green. If it is red, you stick to the red until the price closes and it tells you an opposite to what you were seeing. Okay, so this is what you're going to do. So when price, there's two things you want to see here. Number one, you want to look at the color of the candle. Okay, that was the wrong one there. Sorry, let me just change that quickly. You want to look at the color of the candle. And if the color of the candle is green, it is a buy. Okay. If it is red, it is a sell or a short. Okay, the reason why I'm using this terminology is because there's a lot of newbies that are going to be watching this video and they don't know what, they don't know the terminology as we know it. So whenever I explain these things, I try and use the simplest of terminology for a beginner trader, okay? Because remember, we've been in the game now for a while. We know the terminology, but especially the new guys coming into this, they don't know. They don't know what supply and demand is. Where's the demand area? Where's the supply area? What is a call and what is a put? They don't understand the terminologies, guys. So that's why we stick to the basics: buy and a sell, long and a short. Okay. So that is your first thing you're going to identify on your higher time frame. Next thing you're going to do is you're going to identify where is price. Is it above the moving average or is it below? If it's above, it's a buy or a long. If it's below, it is a sell or a short. That's it. But now, Marnie, what if it's a green but it's under the moving average? All that it means is that you are still in a buying position. You're still going to be looking for a long, but you're also taking into consideration that price at this moment here is, however, below the moving average. So you're just going to wait. I'll show you guys now how on the 5-minute time frame, when you have this happening to you, how you are going to filter out getting the position. So you are not going to get a position where you're going to start the session and take the buy all the way to the top. What's going to happen is you're going to have to wait for price to go up, come back, and when it comes back on that pullback, because this is considered a pullback, so you won't get into your position immediately like some of the other ones. I'll show you guys how those positions look now. You're not going to get into your first position. You're going to wait for price to actually go up and then come back to give you a retracement. So price will go up. It will give you that retracement. So in the beginning of the session, you will have an entire retracement. And once the retracement is done, you will then look towards taking your long position. Then you will continue the trend, as we say. But during your trading session, you are not allowed to change the bias. So if you look at the candle at 2 p.m. and it is above the moving average and it's green, it is a long position. Okay. So during your trading session, you're not allowed to flip back to the 30-minute time frame. And now, because it's now going, it's starting to flicker red. Now you go and change your bias and say, okay, well, I don't think it's a long anymore. I think it's a short now. No, whatever the bias is that you got in the beginning of your session, you will stick to that bias. Okay. So don't get into the bias and halfway doing, you're like thinking, oh, let me switch over. You do not. You stick to the bias. Okay. So now we're on the 30-minute time frame here. We have our bias. What do we do then? So now you can switch off your linear regression. You no longer need this indicator. You're simply now just going to pop onto the 5-minute chart. This is now where you're going to look for the entry opportunity, where you're going to look for a trade. Are you going to get a trade every single day? No. Some days it's not going to give you the retracement that you're looking for. You're going to walk away. Okay. If the trade is not there, don't force it completely. Just walk away from the chart and come back the next day. Right. So let's quickly have a look at this position here. How did I determine this specific position here? What you're going to do is you're going to set your chart to 5 minutes. You're going to leave your UT bot exact same settings. You're just going to switch off your linear regression, and then you're going to move over to, so let's take off the Fibb here. You're just going to move over to your UT bot. Linear regression comes off. Now, very important, on your 5-minute time frame, you are going to put what the higher time frame bias is. So if it is a bullish trend, you're going to write there bullish trend and above the moving average. Why do you do that? To program your brain and remind yourself of what the higher time frame trend is. Because a lot of the time when you are trading the session, you might start looking at these candles and thinking, you know what, I should take a short here. No, the higher time frame trend is telling you bullish. You stick to the bias. Don't change your bias. Okay. So what's going to happen now is I'm going to quickly take off these, and then I'm going to set up this exact same position for you guys and show you guys how this works. Now, what you're going to do is you're going to come to the chart at I would say let's say 12:30 to 1:30. Okay, so now you're going to wait. Oh, sorry, you need to change your candle. Sorry, guys. On the 30-minute time frame, you're using Heiken-Ashi candles. This strategy, you do not trade Heiken-Ashi candles. Do never trade on Heiken-Ashi candles. Return back to regular candles, because Heiken-Ashi candles gives you an average price movement. You want to see real-time price movement. So how did I determine this white level here, or this white block here? What you're going to do is you're going to look for the 1 p.m. candle. Now, where is my one? I can't see it with this thing. Let's just hide this thing. So here is, where's the 1 p.m.? So here is the 1 p.m. candle, right? You can see this is this big green candle here. So what you're going to be doing is, okay, just hold on. So you can see here that what you are looking for is you're just looking for an area of support and resistance, an area where price has been moving sideways. And you can see right here that this area right here, even if you pull it back, you can see that price was moving within this area. This white block is not you don't have to be very specific. If you want to move it to there, for instance, you want to include the wicks, that's fine. All I want you to do is identify around that 1 p.m. candle, what was the range? Where did the price go? Was it, where is it? You'll see. I'll show you guys now in the examples that are to come. You will see there what is the overall trend. You're going to see that 1 p.m. block, how you're going to identify that whenever price, before it opens in the New York Open, that pre-market, you're going to get price doing this on gold. It's literally going to be flipping in a specific area. You want to identify that area. If you don't know how to do it, then join me every single day from 2 to 4, and you can come and have a look at where I put my levels. Then you can trade with me from there, okay? Until you've got the strategy. Right, so this is the area that you're going to draw. So you're going to put your block from 1 p.m. and you're going to drag it all the way through to 8 o'clock, okay? Because now, look at this. Look how price returned exactly back to this block. This 1 p.m. range is very important. Okay, so if price, you can see price broke through here, flipped all the way back. Obviously, we had NFP that happened. This is this big candle here, and we went all the way up. Now, when you have price flipping through this white block, you can decide the moment that you see the flip through happening, you can step back from the chart and saying, I don't have a clear-cut direction at this point in time. I'm going to walk away from the chart because I can't see which way is price going to go. Because if you have that 1 p.m. range, if price breaks towards the downside, retested it, it is very much likely that price is going to continue in that direction. If price breaks above that 1 p.m. zone, comes back to it, the likelihood that it's going to continue the trend is highly likely. Is it 100%? No, it's an 80%. So that's why if you do have that push down to here and it goes through the white block like this because of news, you can step back from it and say, no, this is not an A+ setup. I'm not going to be taking the trade. Why? Because look at my trades. These two trades are still open. I'm keeping them over the weekend. I literally had to shut off I think somewhere here, I took a break even or that with my prop firms. Because right here, price wasn't going anywhere. So I literally had to exit the trades on my prop firm because I can't keep them over the weekend with Top One Trader. So on my personal account, it's still open, but you can see price never really went anywhere. So whenever it's going through this white block like this, it is just showing you consolidation. So the best thing to do is step away from the chart. Okay, but now that's step number 1. You identify your white block. That is your 1 p.m. consolidation zone. Okay, if you're in any other country, you're watching this, you're in Australia, America, UK, whatever, doesn't matter. What I want you to do is go to your chart and then go and change the settings on your chart to set the time frame to GMT Johannesburg. So it's +2, GMT +2 Johannesburg. If you want to trade the strategy, you have to see what I see. Okay, so then you're going to have to change your chart to +2 GMT Johannesburg. So you're going to have to go and find Johannesburg's time frame. Here it is, right at the bottom, UTC there. You're going to have to go to Johannesburg. Okay, all the way to there. Let me just make sure. Oh, can you guys not see my chart? Well, no, on TikTok, you guys are not going to. Can you guys see my chart here on YouTube? Yeah, you guys are seeing it on YouTube. Okay, cool. Okay, so you're going to have to change the UTC to +2 Johannesburg. If you want to trade my strategy, you've got to see what I see. Okay, this is a lot of the times where you fail with the strategy is because the creator of the strategy didn't tell you the exact time frame and they didn't tell you the exact what they are looking at. So you are trading it in your time frame and you can't understand why you're not getting profitability because you're not seeing what I'm seeing. My results are based upon this specific chart. Okay, guys? Guys, on TikTok, if you guys want to see what we're doing, you got to pop onto YouTube because on YouTube, I'm sharing everything. The screens are live on YouTube here. All right, so you can see here, because we went through the block, you can see price never went anywhere. But now what you're going to do is you are then going to wait for 2 p.m. to appear on the chart here. At 2 p.m., exactly 2 p.m., you are going to open a block all the way until 1600 hours. Okay, so why is 1600 hours? Is it 8? Oh, so it's 2, 3, 4, 5, 6. 6, sorry. 6. So you're going to go to 1800 hours. Why is this block important? What I am doing in this strategy is I'm looking at 2 4-hour candles. I'm looking at the New York candle from 7 okay, which opens at 7 o'clock in New York time. That's from 7, 8, 9, 10, 11. That's the second 4-hour candle in New York open. That's the first block that I'm looking at. The next block is I'm looking at my 4-hour candle in South Africa, which opens at 4 p.m., okay, which is 1800 hours. So you need to draw one block here you need to put in from 2 p.m., 1400 hours, all the way through to 1800 hours. The next block that you're going to put in, you are going to start it from 4 p.m. my time, which is 1600 hours, all the way to 8 p.m. So that's what I'm saying. It's okay. There's 8 p.m. Now make sure that you change the color of the two blocks. I don't care how you change your blocks. If you want to make them white and yellow and pink and purple, that's entirely up to you. Just change the two blocks. Okay, so what are you going to do? You're going to then take this block. You can see right here, it's 14 hours. You are going to be marking out what was the lowest price, what was the lowest that the price made, and what was the highest that the price made within that range. So you are then going to expand this block. Yes, guys, as the price is developing, you are expanding the block. Okay, so this was the highest that did. So you can see there, that's the highest candle, that's the lowest candle. This block, you're also going to mark out the highest candle, and you're going to mark out the lowest candle. Now you can see this is where, okay, you can see right there we wicked even lower, and you can see that both of these blocks stayed within the exact same range. When these two blocks, when those two 4-hour candles line up exactly with their highs and their lows, it means consolidation in gold. Okay, so that means consolidation. And when you see the consolidation, my suggestion to you would be is move your stop loss to break even. Jump out of the trade at break even. No, out. So the moment that you see these two blocks are on top of each other, and the one block is not breaking the other block, it means consolidation. Gold is going nowhere. Get out of that trade. It's going to be a very bad trade for you. You're going to sit in it for a day, and you might even hit stop loss. So rather if you are in profit, bring your stop losses up to break even. Just make sure you cover swap fees and the rest of your fees. Or what you can potentially do is you can move it to one of these lines here. So if price is above it, you can move it to this midsection of the block. Another important thing is when you do set up your blocks, the first time you put your rectangle, make sure to engage the middle line. The middle line is extremely important within this block, because within this block, that 50 range is the exact 50 range that we will be working with on the Fibonacci. So now that you have your block, okay, so remember now, we need to now use our imagination for a moment, guys, is you are not, the blocks you are seeing right now, okay, we are looking at historical data. As you are trading the strategy, this price is busy expanding. So you need to expand your blocks with price, okay? And it's very important for you to expand as the price is going. Now, what is our overall bias? Our overall bias is bullish, right? So now, if you look at where price came in, it's very, very important. When you are looking for a long position, you want price, when it comes into this 2 p.m. block, you want price to go straight down. You want price to come straight down. Why? Because if price is coming straight down, then you want price to find an area of support, turn around and start going up. And when it starts going up, this is the moment where you want to potentially look to get into the trade. Okay, so this is where you want to look for that bullish movement. Okay, so you want to look for it where price, if it starts in the block, if price comes into the block and it starts going immediately up, you now know this is going to be, you're not going to be trading with the trend. You are having a retracement on the 30 minutes. It's telling you that price is still going up on the 30 minutes, still confirming your bullish bias, still going up, but now you need to wait for some sort of retracement. Don't worry, I'm going to show you guys exactly what it looks like on the chart. So what happens now? Price aggressively pushed down. That's a good sign. It's a good sign for a bullish setup. What happens? Price expands all the way up to here. Now, this is extremely important with the UT bot, guys, is when price is expanding like this, okay, you want to get in a good Fibonacci level. Now, for the guys that wants to trade this without a Fibonacci, you are more than welcome to this. I just say, for me personally, just following the UT bot signals is not a good idea, because look at this. You will get into the trade right here. There's the buy signal that you see. So you would jump into the trade there and hopefully take the trade for a 1 to 1 to there. I don't want to be getting into a trade like that. I want to get into a key level. I want to get into a place where I know that there's enough space for me to have a good risk to reward. So what happens? Now you have this bottom that was created there. So where do you fib to? Very simple. If you're going to be looking for a long position, you want to see red, flip to green, flip to red. Okay, this is very important in the strategy. It's in the handbook itself. For a long position, you want to go from red, green, and then start going red. That's when you bring your Fibonacci on and you start looking for the retracement. So that's the ideal. So it's from a red bottom, green, and then you want to start seeing it turning red. You want to see the UT bar turning red here. Once it starts turning red, you're like, cool, let me start looking at my levels. So what do? You bring the Fibonacci on. So let's quickly talk about the settings of the Fib. So this is what your Fib is going to look like. Okay, here's the Fib. So on your Fibonacci, you are going to have the standard levels. 0, 0.25, 0.382, 0.5, 618, and 786. So these are your regular and all the way to 1. These are your regular Fibonacci levels. Now, the 1.079, 1.155, and 1.25 is your stop loss levels. So these three here, I must actually change them all to one color. Let's make them all like purple. And we choose the other one, this one. So let's make them all purple. Then we know that, so all of these are stop loss levels. Okay, so when you put your position on, so when you do get into a position, which I'll show you now, you can decide, do I want my stop loss to be here? Do I want my stop loss to be here? Or do I want my stop loss to be there? Obviously, your win rate obviously increases the wider your stop loss is. For me, the stats that you're seeing is I'm putting the stop loss at the 1.079 and then I target the minus 0.055. Okay, so you'll see here, you have a 0.5 minus 0.55. That is exactly the 2.5 level when you're entering at the 0.618. So that's what I said before, how we're going to enter the trade. You're going to enter the trade at a 786 level, and you are going to look for a second trade on the 618. Same stop loss level, and then you are going to target that same level there. Now have a look. Trade number 1 is a 4.51. Trade number 2 is a 2.6. Okay, do you guys see it now? So that means that your trade you're going to enter at the 618 is going to go all the way to a 2.5. But your other trade that you're going to get in is going to give you a 4.51. So let's say on my account, I use 2% lot size, okay, of my account size. So 2% of my account is what I go in. So 1% goes onto this trade and another percent goes onto this trade. So if I have a 10,000, let's just put that into context now. Let's say you have a $10,000 account and you are risking $200, right? So that means with this trade, if you're risking $100, you are looking to make $450 entering at that level. And then the other trade, you are looking to make $250. So that means in total of your trade size, you are trying to take at least about $700 in one trade. Okay, so that's the idea, is I want to get $700 off one single trade. Okay, do you hit the 786 all the time? No. Sometimes you're going to only get this one in and it's not going to retrace that deep. That's okay. Then you take the one that is there. Okay, so that's why you'll see on my risk to reward and stuff why it says that there's it doesn't have a fixed 2.5 every time, because sometimes I do get in on the 618, but it doesn't retrace deep enough for a 786. So then I have half of my trade going to TP, okay? So don't adjust it. So if you do get into the 618, don't adjust it for yourself. If you guys are a beginner and you're like, yeah, money, I can't go that far, you are more than welcome to take your trade back to here. So your first one, your 786, you can take it to here and you can take your other trade to the 0 level. Obviously, your win rate is going to jump from a 68 all the way to about 75, 79 even, because you're now just targeting a shorter distance. But do you see both trades? This one is going to give you a 1.38 and this trade is going to give you a 2.66. It's still a freaking brilliant risk to reward. So you see, guys, what you're doing is you're using one trade to try and maximize. This is what I always say is try and take a lemon and squeeze as much out of the lemon as you can, because your winners are going to be your winners and your losers are going to be your losers, right? That's inevitable how it's going to work with a strategy. But at the end of the day, how can we maximize on the winners that we squeeze more out of the lemon? Well, if you do take only your position at the 618, you are continuously going to have the same risk reward. But if you do take your trade and break it up and say, okay, cool, let's see if we do get a deep enough retracement to the 786, then you're going to have a lot more in your pocket for those trades. Okay, so the settings of Fibonacci, this screenshot is in the PDF for you guys. You are more than welcome to go and set up your Fibonacci. We didn't do anything to the Fibonacci. It's still the exact same levels. We just added in these levels for stop loss. So we added in our stop loss level and we added in the TP. So let's make the TP yellow there. Then you guys can see it. So you guys can change it to those colors. So you can see we just have like a fixed TP. Why? Why is it important to have a fixed stop loss and a fixed TP every single time? It makes your statistics better digestible. Okay, what do I mean with that, guys? Is if you keep your risk to reward the same, you are going to become predictable in your outcomes. Okay, so if you're consistently changing, guessing your lot, guessing your stop losses all the time, you are not having consistent outcomes over a certain period of time. You are now, it's all subjective to where you see it. And the reason why I created the Fib this way is, so when I put the Fib on the chart and you put the Fib on the chart, we both see the same thing, is it not? So both of us are targeting the same stop loss and the same TP. So when I say to you, guys, put the Fib on, we're both going to have the same level. It might not be the exact same, digit here, but we are kind of like in the same area. We are seeing the same thing. And this is very important from for when you deploy a strategy, is you need to create a strategy that someone else can replicate the way you see it. And this is exactly why the Fib has this. You're still using the same levels, no change to them. It's just where are we targeting? Well, this is where we want to target. Because over the strategy, 65% of the time, you're going to hit the 0.55. So 65% out of your trades, you're going to hit that 0.55, which means you're going to be making a lot more on the upside than the downside. Okay, so guys, that's pretty much on the Fib side. So now, where do you Fib? Okay, so on a long opportunity, I said to you guys, red, green, and then once that first red candle comes down, you then grab your Fib, go to this lowest that price made here, and you go to the top, the tippity top, where price went there. And now, what are you going to do? You're going to wait for price to retrace all the way to the 618, which is there, and the 786, which is there. And then you are going to put your stop loss. Remember now, this, you did not know that the price is going to come this deep. You are now looking at the position and saying, listen, I think the price is going to come further down to here, and let's see what happens. And then you put your stop loss. You can see I put my stop losses at this first level here, and you can clearly see price came down, rejected off that same level, and continued further on. Okay, so now this is how a long opportunity is. Now let's quickly go and look at some more opportunities. So this was the trade we took on Friday. Here is the trade that happened on Thursday. Okay, so let's break this one down as well. So we went to the 30-minute time frame. We saw that it was a bullish trend. Look now, this time we were below the moving average. Observe something. We were above the moving average. Here we were below the moving average. So what are we looking for? First of all, we are looking for this white block area. Okay, so let's have a look. Where's 1 p.m.? Here. 1 p.m. was run about here. Do you guys see this channel that gold created? Look at this channel that gold created when gold within this 1 p.m. It's almost like a squeezing period. And I've been observing this period for a while. So when that squeezing has happened, I do believe that is the pre-market entering their positions for It's like a liquidity zone that gold is creating. So right here, you are going to try and get as much of the top and the bottom in. Now, observe. When price broke out of this white block, came back to retest, do you see we had a continuation of the trend? And then later on, price came back down, broke below this white block, came back to retest it, and look what happened. It continued towards the downside. Do you guys see why I'm saying the 1 p.m. block is extremely important for you to observe? So you can take both a long position here, and the moment that price breaks below it, you can say, okay, cool. I think I'm out of these trades. If I do want to take a second position, you can see that price broke down here. Let me look for an opportunity here towards the downside. Okay, and you can see that price did a very nice down all the way down to here, which would have been a nice 1 to 2.5. Gold is moving in a 2.5 to 3.5 range. What do I mean? The risk to reward, guys. The movement in gold since March has been enough. The volume in New York is enough for you to at least within that session get a 1 to 2.5, sometimes even a 3, and sometimes you can go all the way to a 5. I will show you guys that now. Okay, so what happened here? Exact same thing. So we drew our white block in here. Do you guys see that price pushed up? Immediately pushed up when it entered into our 2 p.m. block. Pushed up and then fell off and continued. Now, what is our rule for a long position? Red, green, red. Okay, so where is the red? Here's the red. Do you guys see it? There's the red. Then we had the green. Then we had the red. So what do? We go and look for the bottom on this red. Take our fib. Put the fib right at the bottom here. Fib it all the way to the top of the area where green flipped to red and then entered a 618, enter a 786, and then put our stop loss just at the 1.079. Look at that. Stunning. 4.24, 2.3. Very nice. And I didn't even take it as far as I should have. It should have gone all the way even further up here, but I took the trades out right here. The moment that I started seeing that price was dropping down, I took the trades out. Okay, so what can you do from a trade managed perspective is if you are targeting a much higher level like this and you start seeing price going in your direction, you can then come to this block. Do you see the purple block here? Do you see this middle section here? You can take your stop loss and move it to the middle section. That you're going to consider as a break-even trade. Okay, so once price starts, it pushes back. You can see prices going to the top here. Now you see prices starting to fall back. Now you're saying to yourself, okay, cool. I don't know if we're going to reach the level. So what you're allowed to do is you're allowed to take it from here, both of your positions, move it onto the zero, this midsection line, and allow the price to either take you out or continue. Because if we are going to be breaking this midsection of this area, it's going to most probably break towards the downside. And you can see it clearly happening here. Now let's look at one more example before we go to shorts. Now, this is a retracement long position. Did you guys see all the other two ones? That we came into the block, we were above that white level, and we kept going up. Okay, now this is what we call a retracement trade. What do I mean with it retracement? It means that we were in a bullish trend, and when we started our 2 p.m. session, price was retracing on the 30-minute. It meant that there was a retracement happening. So what's going to happen now is you can see from here's the 1 p.m. zone, right? Here's the 1 p.m. zone. You can see right here. We drew the block across. What happened? Price didn't go up. Because what do we want to see? On that white block, we want to see price pushing up, coming back, and continuing. But now what did price do? Price broke towards the downside. And this is why I'm telling you guys, do not change your higher time frame bias. Do not. Please do not. If it was bullish, you stick to the bullish. Okay? It just means sometimes that you are going to have a retracement. The 4 trades that you lose out of 10 for our win rate, those 4 trades or 3 trades that you lose, that is when the market does, however, do an opposite and you get taken out of the trade. Okay, but most of the time, 60 to 70% of the time, you will be in the direction of the trend. Okay, so the times that you do hit stop loss, you can sit back and say, you know what? Okay, the trend did turn against me. It completely turned against me, and that's why I want to be out of the trade. Okay, so look here. You have your white block here. Here's the 1 p.m. zone. You can draw it further up if you want to put it a little bit higher there and you want to capture as many. But the idea with the 1 p.m. zone is you want to look towards that 1 p.m. and look for an area of consolidation. Where did price do this? That's what you want to go and look for. How did price, and look at these candles. You have push up, a little bit down, push up, little bit down. You understand that? And then what happened? We had a break towards the downside, a retest, and we continued. You're not taking a short. Remember, the higher time frame is telling us it's bullish. So what do? You wait for price. So I'm just going to take this off. You're waiting for price. Here is the 2 p.m. block. You can see price aggressively push down. And then it did like this whole like consolidation. And then it broke towards the upside. So what do? Again, remember, red, green, red. So where's the red? Here's the red. Here is the bottom of the red, not there. Here is the bottom of the red. Remember, we are going to be trading. We want to trade in the direction of the trend. So we want the retracement to finish, and then we're going to get in on the trend. This is what happened here. So where do we fib? From the bottom here. Where did it flip from green to red? That was the highest position. Do you see? Red up to here, came back, and you guys see that there's only one position here. There's not two positions. Sorry, there is two positions. I thought this was it. Do you guys see here? Price came back, got in on the 618 here, and then got in on the, you'll see here, 786, we never got in. Never ever got into the 786 here. We only got the one trade in here, and then price continued. And where did it continue to? All the way to the top. You guys see it? So during your session here, price continued all the way to the top, because what did you do? You waited for the retracement to finish, and then you waited and you saw, okay, no, price is continuing up. And then what will happen if the downtrend continues? You will not have this type of pullback. Price will go down. It will flip-flop around the 382, and then it will continue its trend towards the downside. But so it's very important, guys, please. If your 30-minute bias is bullish, you stick to that bias. Okay. And then obviously, as you guys can see, I left the trade because at 8 p.m. I'm finishing off for bed, and the trade went all the way. But what you could have done is, once you saw the trade was going in your direction, you could have potentially looked to moving it up to here, or you can just be like me, leave the damn trade. If it's going to go to stop loss, going to go to stop loss, going to go to TP, it's going to go to TP. Okay, so that's the way I look at it. Now let's quickly have a look at, okay, so here's another one. You can see here, we didn't get in on the trade during the session, but we did get in on the trade late after the session. So what happened here? You also had price pushing up here. Here's the white block. Do you guys see the difference in the white block here? Let me make this a little bit bigger. So what happened? We had a very, very small block here. You can see price push down. And then right here at 1 p.m., we had this little candle that formed here. That was the only area that I could take. I mean, if I look back on the chart here, you can see that it aligned with, we had price rejecting off there, and then we had this little bit of an area here. So what happened? Price aggressively pushed up bullish. So now you're thinking, oh gosh, I missed my move here. I didn't get into my. Now you guys see. Yeah. Price agreed. There was no deep enough pullback for me to even think of getting in on these positions. But what did I do? I programmed my trades in. I programmed them in. I put my trade at the 618. I put my trade at the 786, and look what happened later on. During the night, price came all the way back to this one and then shot up for the morning. And then I woke up and there was money in my account. Okay. Next one. Let's have a quickly look. I want to quickly have a look at okay, so this one was a bearish trend, right? So why is there no trade here? Because I didn't get into a trade, guys. You're not always going to get a trade. So again, here was the 1 p.m. zone. You can clearly see that the 1 p.m. zone was around here. Where's the 1 p.m. candle? Where's my 1 p.m. candle? Oh, yeah. Here was the 1 p.m. zone. Now, obviously, I took it from the top here all the way to down here, because that was almost like the area that it created there. You can see when price came back, it did not break above this area here. It stayed within that area. And then what did I do? Now, for a bullish setup, we want to see red, green, red. What do we want to see for a bearish setup? Green, red, green, green, No, wait. Yeah, we want to see a greenish. We want to see a green trend, and then we want to see a red. No, we want to see a red pullback. Sorry, guys, my brain. We want to see a red, and then we want to see it turn green, and then we want to see it go red further down. Okay, so you want to see a red push down, a green pullback, and then on the green pullback, you want to see that trend. So the green will be right here. Do you guys see that? It was green, then it was red, and then it was the green would be the next pullback. That's for a bearish setup. So it's green, red, green for a bearish setup. For a bullish setup, you want to see red, green, red. Okay, it's going to take some practice. You've got to practice this to understand it. So look here. Here was the green area. We pushed down. We came back. Now, do you guys see this all happened pre-session? I didn't see this. I came to my charts at 1 o'clock here. I pushed this up, and then my session opened up here at 2 o'clock. Then I realized, okay, you know what? Look at this. We had this drop off here. We had this pullback here. Let's see if price is going to maintain within this area and then make a breakdown towards that side. And price did exactly that. I didn't enter a trade. That's why it is not there. But this is just an example for you guys to say that even though I didn't take a trade because we were halfway, for me, it's like I don't want to be chasing a trade. So I want to come to the session and I want to see kind of like my setup. This all happened from like 12 o'clock and that. This all happened. So, but again, I could have still jumped in on the trade here, and I could have still jumped in the trade on the 618, and it would have continued, and I would have gotten my TP. So where was my TP? The TP, where's the TP line? It's because my sorry guys, this Fibb of mine, let me just redraw it because my new Fibb settings. So if I was to draw it from there all the way to down there, you can see we had a nice pullback all the way to there. That would have been our stop, our area there. And you can see price didn't really get there. But as I said to you guys before, if price does start coming back and you're like, oh, you can put your stop loss either to this block or this block's midsection. It's entirely up to you where you want to put it. And then you can see price started breaking back towards the upside here. And then, so I would have taken a stop loss on this one because I would have checked the next day's market and I would have seen a difference. So let's look at another bearish setup. Again, price trending down. So what do? We look for that white block from 1 p.m. You can start looking at 12:30 all the way to 1 p.m., all the way up to 2 p.m. So what are you looking for? You're looking for consolidation. Look at the consolidation here, guys. Some days it's going to be easy to see. Some days it's not as easy to see. But look here. You can clearly see how price started squeezing into an area. Okay, you see there? Squeeze there. And then what happened? Price explosively broke out, came back, and now what was the trend for the day? Was a bearish trend. So what did we do? We're not looking for a long. We are not looking for this long. We are waiting for this pullback to finish. Guys, this was a pullback all the way from there all the way to the top. If you go to the 30-minute chart, you will see that this entire move from here to there was literally, you had the downtrend and then you had this pullback that happened and then you had the continuation that happened right here. So what do? We wait for the pullback. So what do we want to see? Bearish. We want to see green, and then we want to see red, and then we want to see green. Okay, so that's what we want to see. So what happened? Where do we Fibb? So from here is where we had the highest point on the uptrend. This was the highest point. Then we want to look for that red. Where's that pivoting point on the red? And then we want to start seeing the pullback. You can see there's only one trade here. I didn't get in on the 786. You can see it never pulled back deep enough, but I did, however, get my 618 here, and I took half a trade all the way down to TP. Now look how far it did actually go. So some of the times what you can do is if you do want to extend your trade, you can look towards targeting this white block. So price pushed aggressively away from the white block. Look what it did during the whole night. Always come back to test the previous day's white block. That's why the 1 p.m. on the New York session is so important. This area of consolidation here is extremely important because price 70 to 80% of the time will come back to you. So look at the potential within this trade. So if you wanted to swing it, you could have set your target there. You could have maybe moved once you saw price coming down. You could have moved your stop loss to break even, and you could have seen, and the next morning when you woke up during the day, you would have seen that you would have been deep in profit, and you would have taken this one from a 1 to 2 all the way to almost a 1 to 4, all the way down to here. Okay. But as you are trading it, you'll get better at it and you'll understand how the market moves and how you can improve your risk to reward. Okay. So now let's have another look at another sell setup. Same thing again. So guys, I would highly urge you, if you want to learn the strategy, come and join me every single day from 2 to 4 and watch me trade it. Okay. So what is the 30-minute time frame telling us? It was a bullish trend. We were above the moving average. Okay. So if we're bullish and above the moving average, then I'm thinking, hey, we're going to get a nice little bit of a pullback and then we'll look towards a new trend. Now, why is there no trade here? Because sometimes the trend is going to save you from making a mistake. Okay. So you can see here, we did not have more upside. This was actually a pivoting point. This was actually a pivoting point where on the 4-hour candle, it went up, it stalled, and then it dropped off. So the trend reversed on us. It wasn't a retracement. It was, in fact, a reversal. So price aggressively bought the entire morning. And then you can see here's the 1 p.m. zone. I was looking for some more upside. So what happened? Price broke down to this level, came back to here, and then what happened? When it came to these levels, it pushed aggressively up, and then it broke further down. Now, technically, on the diary, not on my trading diary, but on the actual trade history, the back test and the foretest, this trade was recorded as a loser because technically, you would have taken a long position here, long position there. You would have put your stop loss here, and you would have gotten taken out. And then you have another long position that you would have put in here, and you would have put your stop loss to here. I could not trade this day, guys. So this day I was not in front of my computer on Thursday the 30th, so I wasn't able to trade the day, and I saved myself a stop loss. But on the overall stats, because in my diary I'm sitting at 72, but on the overall stats for the strategy, you'll see it's 68 or 65 or something there, because we take into consideration the missed trades as well. So I can't trade I don't trade every single day. I try and trade as much as I can, but you can see here, this would have been a loser. A loser, okay, guys, on the books. Okay, so let's have a look at one more setup here, and then I think that's pretty much, we'll take it from there. So you can see here, we had a downtrend. Here was the 1 p.m. squeezing. Even if you take it back, look at the squeeze, guys. Look at the squeeze. Look at this massive squeeze here. Price came in here, pushed up to here, pushed down, pushed back in, and then it started flip-flopping. Like, you can literally see how the price is starting to squeeze in. Now, you can, I mean, if you want, you can move the white block all the way to the top there, and you can move the white block, all the way down here if you want. It's entirely, if you want to go all the way further down, and you want to capture as much price as you want within that zone, you're more than welcome to do it. Okay, this is what my eyes saw, but you're more than welcome to go there. That's why I used the stop loss helper here. Okay, now you can see this was a loser for me. Okay, I want you guys to observe this was a loss. Okay, why was it a loser? Because you can see here, same setup. We're looking for a short position. So we want to go from green, red, green. Okay, so here it is. Where's my red and my green? You can see right here, we had sell off, red. So there's the green area there. Now what you guys can see is, do you see that there was a green area here and a green area here? So technically, the Fibb should have been there. Okay, do you see? And I would have missed this stop loss here. But it's not an exact science. Okay, it's not an exact science. The way you're going to do it is the way you're going to do it. I put my Fibb from here. You can see that this area was directly. So price went all the way back into this exact. It was a liquidity zone. I could not have known it. Okay, and you can see here, I trade within this session. The actual move happened all the way from 10 o'clock. This is where you had the first pivoting point. Price pushed back from here, then pushed further down. Okay, so this is something I will try and perfect over time for myself to try and have a look at. And then price stalled, and then it had the downfall. So the initial move happened here. You can see I got in only here, and then what happened. So if you were on the second TP here, okay, you would have also been taken out. And if you were on the third TP, you would have also gotten taken out. But if you had gotten in on the first move here, you would have had your TP. Okay, so you would have gone to TP there. So it's not an exact science, but don't worry, there's enough winners within the strategy to keep you very profitable. So this was a loser. Okay, guys. So this is pretty much how the strategy works. It's not something you can automatically automate, and that you have to come and sit down and you have to draw in your areas. You have to look towards where those things are. And don't worry, I am trading this from 2 to 4 every single day, Monday to Friday. You guys can come and have a look at where do I put in the zones, where do I put in the Fibonacci, how do I trade. So if you see me taking a trade, it means it goes onto the diary. Okay, guys. And then there's obviously the full stats, which is here also available. It will also be available in the groups. Here's all of the trades. So you can then take this diary and you can literally go back on the charts. Here it is. Here's all the trades that was taken from the 23rd of the 2nd. You can see all the trades that was taken and everything that we had looked at. So here is the overall strategy with all of the trades. This one has not been filled in because we haven't finished. Friday's trade is not finished yet. So you can see here all of the trades. You can go back and you can go and have a look at what happened there and do the same type of setup for yourself. Okay, so there's the diary here with all of the trades. So this one reflects all of the trades, including the ones that I've missed. And this is then obviously how many of the trades I did actually take and what win rates. So out of the, what was it? Out of the 60 something trades, you can see I've only taken 47 of them. Okay, so that's how many of the trades I was able to take. Okay, so again, guys, so I hope this is a nice quick breakdown for you guys on how this works. Let me just go back here and stop my screen sharing. Okay, guys, so that's so Latabu. These indicators, we've taken all the indicators and we've now turned them into our own personal indicators. Okay, so if you have a look within the PDF, you guys will see that there's a new indicator now called the Fibb block strategy. So it won't say UT bot, it's going to say Fibb block strategy, and we've made some modifications in there for you guys. And then another thing as well, guys, I'm just waiting for the programming of it. Is that Fibb that you guys are seeing there? We are creating an automatic Fibb level. So what you're going to do is instead of clicking on the indicator and trying to drag in the Fibb, it will be an indicator. So like a stop loss, almost like a what do we say? A lot size calculator. So what you're going to do is you're going to take, it's going to tell you put where's level 1, where's level 0, where's level 1. So you're going to go and you're going to click on the indicator. You're going to put level 0. You're going to put level 1. And then the Fibonacci will draw everything out. But here's the great part about the Fibonacci is within that Fibonacci, I asked the guys to please include a lot size calculator. So what's going to happen now with that Fibb is the moment you put the Fibb on, each one of those levels, so it's going to give you those prices, and next to those prices are going to be lot sizes. So once you put your Fibb on, you're going to click on it and you're going to say how much is in your account, how much are you going to be risking per trade. So you're going to put in there, it's going to be a $1,000 or a $10,000 account. You're going to be risking 1% per trade. And then on each one of those levels, it's going to tell you. So it's going to already take the stop losses. It's going to take the stop loss. So you're going to say, is it stop loss 1, stop loss 2, or stop loss 3? You're going to click it in there. And then once you got the Fibb and you clicked on everything, it's automatically on the Fibb going to tell you, according to your account size, this is the lot size if you're using this stop loss. This is the lot size if you're using this stop loss. And this is the lot size if you're using that stop loss. According to your account size. So the Fibonacci tool is now not only going to be a Fibb for you, telling you where to put your stop loss, but it's also going to give you a lot size next to the value on the chart. So when you put your Fibonacci on, you can automatically know what your stop loss is. Because I think you guys would have seen it sometimes with me when I'm putting it on. You know, you've got the price wicking all the way in, doing a single wick, and then price continues. And then you're too late to the position. So what I want to do is I said to the guys, what I want is I want a Fibb where I can put my 0 level and my 1 level and then click on it and say, this is the size of my account. It's a $100,000 prop firm account. I want to be risking 0.5%. And then according to the levels on the Fibb, it's going to determine my lot size for me so that I can execute on all of my multiple prop firm accounts because it's a challenge for me. I've got $50,000 lots, $50,000 prop firms. I've got $100,000 prop firms. I need my Fibonacci to give me the exact level. So then you don't have to draw that little tool thing in to say, okay, this is the level there. You can just check on the Fib, what is the prices that are there, and you can say, that's my TP price, that's my entry price, and that's my stop loss price, and next to it will be your lot size. Okay, guys, so it's going to be very, very simple, very, very easy for you guys to use. And the reason why I designed it that way is because I'm trying to make it easier for me, guys. That's the reason why I designed all these things, is I want to make it easier for me. Because right now, all of my challenges, if my Fibonacci has better settings in, or it's easier to deploy, then I can streamline my strategy or my profitability. But guys, this is how the strategy is going to work. So what's going to happen now is on all of the groups is going to go the PDFs. This video is going to also be included in the PDF for you guys to understand the breakdown. So if you do see this video in the future, I will still be trading it on TikTok every single day live from 2 to 4 Joburg time, South African time. You can then come and join me on TikTok and you will see me trade it live every single day. So this strategy I do trade. I do think I've got enough data behind it now to kind of like put it out for everybody. And the reason why we're giving it out for free is because the indicators and stuff we're using, guys, it's not my indicators. I didn't design them. So I want to give back to Quant Nomad. I want to say thank you to them. They were the original creators of the linear regression and the UT bot. We've just taken their technology and built a strategy for us around it. So that's why we're not selling it. Not going to sell it. But if you do want to give back to the community, then I'm going to ask you with all the love in my heart is, if you are looking for a broker, try and join one of our brokers as well. And if you are looking for a prop firm, then and we are trading with that prop firm, don't you want to use our link? It's not going to do anything for you. You're still going to be doing your own stuff. You're still going to be trading on the broker. It doesn't increase anything. The only difference is every time when you're taking a trade with me, the broker is giving us something back. And that obviously that money that comes back into the company, we can then use for for different types of things, increasing, improving the indicator. We can put money towards the actual business to improve the tools that we are using. So you're making money, we're making money, and it's a win-win situation for everybody. If you're completely against the whole IB structure, then that's fine. We're not maybe the crew for you. You can maybe move along. Okay, guys, because I always say, instead of charging you guys, instead of putting all these indicators together and charging you for it, why don't you just take the indicators, come and learn how to trade profitably from me, and then just join one of our brokers, and then the broker can pay us to keep improving the tools and for you guys to make a lot more money. Because for me in sustainable trading, I do not see it as a successful business model if I give you a tool and an indicator and you put money in an account, and then 2 weeks later you phone me or you send me a message and say, hey Marnie, I just blew my account. Why did you blow your account? No, that's not sustainable trading. That's not our brand, and that's not how we work. The way we work it is, we want the brokers to fit the bill, and we want to be able to give it to the community and say, listen, here it is. This is working for us right now. Is my win rate going to stay the same for the rest of the year? I don't know, guys. I don't know. I'm trading this strategy now. I've perfected it now. I kind of like think. And the idea now is let's see how long it's going to be viable. And I think the strategy is really going to work well long term, because it's not something that is automated. You've got to arrive to the charts and look at that 1 p.m. zone. You've got to look at that zone, and you can't automate that 1 p.m. zone. When I sat on with the guys, they were asking me, Marnie, what is the parameters? I don't know. I'm just looking at the chart and I'm saying, this is the area of consolidation that I'm seeing. I'm seeing it here. And then when I draw it, so it's very difficult to put into a robot because it's not the same. Where's the range? How do you determine that range? It's really, really difficult to define that range every single time because you're looking at support and resistance. And I don't want to use an automated tool for that. I want to still have that human coming in and looking at it. I don't want a robot to do that. I want to have a human being where I can rather teach you, this is support and resistance. Look for that area. And you can see now on all the examples I gave you, it's a rough area, guys. It's not an exact area. You've got to be exact on that area. Just look for an area where price is consolidating. Mark it out on the chart and then start looking for that structure. All right. So guys, this is pretty much the Fibb block strategy. I do think we've perfected it. We are working on the indicators to go onto the MetaTrader 5 platform. That is going to go on there. So there's going to be a session indicator, which is automatically going to draw out your two blocks for you. So your two blocks will automatically get drawn out for you. There's the UT bot is going to go onto MetaTrader, which is going to change that candles for you. And you're also going to have the linear regression, which you can also put on to see where the moving average is. So we're all busy converting that over. And then obviously we're also going to be converting the Fibb. So we're going to try and take, once we've got the Fibb ready on the trading view, we're going to take it to MetaTrader 5 for you guys as well. So you can just go on your MetaTrader and pull it in on your regular chart so you don't have to keep flip-flopping between it. And what we want to do as well is we want to look at on that Fibb. I said to the guys, once we've perfected it on that Fibb, I also want to have an automatic feature where if I double click on that area, it should ask me, do I want to open a trade at that specific area? So they said they're going to look into that for me. So I'm hoping that I can, that once I put my Fibb on there, I want to double click on the 0.7 area and it should ask me, do you want to enter a trade? And then I want to say yes and put in my lot sizes and everything and execute. And then double click on the 0.618 and say, I want to enter a trade here on the account. That's going to make stuff so much easier for me to execute. Yes, guys, when I'm done here now, this video is going to get a thumbnail and it's going to go onto the channel there. I'm also going to share it in all of the groups for you guys so you guys can come back and rewatch it. And then I'm also going to be dropping the PDF in the groups now for you guys to go and have a look at over the weekend and then come and join me Monday in the trading room from 2 to 4 and you're going to see me execute this. So this is the strategy I'm going to be executing. So let's see. I want to focus on getting a payout on my top one trader with the strategy as well as my equity edge. So let's see if my strategy can give me a nice payout by the end of the month. I would like to take some payouts on some of my prop firms with this strategy. So the idea now is to see, can we continuously, pass prop firm challenges? And if we can continuously pass prop firm challenges, can we take payouts on it? It's one thing to pass a prop firm. It's another thing to take a consistent payout. So how many payouts can we take with this? And I think from the risk parameters, the worst drawdown we had was 2 trades in a row. But I always say go for worst case scenario. So work on it. Work your lot size on 5 to 6 trades. So rather work on 6 trades drawdown because then if you got 6 trades drawdown, you kind of like, no, okay, cool. My risk parameters are within that area. All right, guys. So yes, that is the strategy. I thought of doing it live with all of you guys so you guys can see it and you guys can see how it works and what it is. So if you guys want the strategy and all of that, you got to then go and watch the videos and get onto the groups and get the PDFs and stuff and then start practicing it. When you come to me, guys, I'm always going to give you something that you got to do. I don't like automation. I hate automation because it only works for a short period. And I think this strategy has now shown me over and over and over and over again that there's that continuous human intervention. You've got to apply that 1 p.m. zone, and then you got to sit down and you're patient. You got to wait. If you come and join me on 2 p.m., make sure you bring something to drink and something to chillax and put your feet up and relax because sometimes we wait for almost 2 hours before we get into a trade. Okay. Thank you guys so much for joining me. I mean, it's Saturday night and instead of you guys roaming around somewhere, you are here with me and we are learning a new strategy. We are focusing on improving our overall win rate. Guys, I'm so sorry on TikTok that I didn't answer all of your questions. I am going to be shutting down the YouTube now so that this video can buffer and then I'll quickly answer the questions on the TikTok if there is any TikTok. Other than that, guys, you guys are freaking superstars, ne? I'm going to tell you guys, you guys are really superstars. It is Saturday evening. You could be anywhere in South Africa right now and it's 7:30 at night and you guys are sitting here learning a new trading strategy, trying to improve your statistics. So I just want to tell you guys are freaking awesome. You guys have my utmost respect for being here at this time and trying to improve your overall income for this year and building an additional extra income or potentially sharpening your skills and becoming a better trader. So guys, I admire you and I speak so much success over your trading career for this year, guys. May you guys go and make as much money and I would love to be a part of that journey. If this strategy can really help you guys to make that amount of money and change your life the way you want, then I am extremely happy for that, guys. All right, guys, see you guys on Monday. And then let's go and see what the market gives us. We never know. But thank you guys for joining me. I'm going to quickly go onto TikTok and just answer some of the questions the guys have. And then I'll see you guys again on Monday. Ciao, ciao. Bye, bye. All right, guys.